If there was no discounting rate, then there will be no investors. So I want to give you my takeaways, my 4 takeaways, which I hope it will change your life. I hope you'll apply it every day of your life. Okay? And the first one is the power of vision or power of foresight. The reason why we had such debate here when I asked that question is because most of us could not be able to see 31 days from today. Are we together? And as you're seated here, the question is, where are you likely to be 20 years from today? If you have a clear vision of where you are likely to be 20 years from today, you are likely to make better decisions today, isn't it? Investment is about having a sneak preview of the future. The people who win in investment are the ones who have more clarity, not perfect, more clarity about what's likely to happen tomorrow. Right now, there's a lot of conversation around AI, if I may digress, isn't it? People are worried AI may take their jobs and all manner of things. AI will definitely have an impact. But the people who are making the best decisions today are the ones who have a better sneak preview of what AI is likely to affect the future, isn't it? So the same thing, how you're using your money today, the decisions you're making today, it's because of your foresight or lack of it. Are you together? See, Sammy? So, if all of us could see with clarity 31 days from today, we would all have chosen 0.01 shilling. But because the human mind is not that complex, we had a debate. But there is something interesting about that. That is where there is a market. In investment, we say a market is a place where people with different opinions come and trade. Meaning, when you meet in the market, you are selling Safaricom, I'm buying Safaricom. Guess what I am hoping? Guess what I'm saying? You must be the fool. And you are saying, I must be there. And that's why, because the future is not very clear, isn't it? Yeah? So, the best investments decisions today are informed by foresight, ability to have foresight. So you need to really spend time trying to understand the trends and how they are likely to affect the future. The reason why you guys are in class today is because you're preparing for a future. There must be some foresight that has brought you here. Are we together? And the same applies with money. So, can you see where the world is likely to be 20 years from today? Can you see how Kenya is likely to be 20 years from today? If you have a foresight, then you'll be able to. So, I remember Warren Buffett said something. I saw a quote about Warren Buffett that really caught my attention. He said he was confident he was going to be rich. Who can say that boldly? He started investing when he was 11 years old. He started practicing some of these principles that I'm teaching you when he was 11 years old. That's why he had this confidence. I may have 20% vision about the future, but the world, majority, we are at 1%. So he's likely to win every battle. So vision, vision, vision. I remember, I just want to, as we do this, I want to be giving you some of the illustrations. I remember 2008, when our current CEO, group CEO, we call it group, Group CEO, Dr. James Moria, was appointed as CEO, the youngest CEO in Nairobi Securities Exchange. He called us to a boardroom. We were just about 11 staff. And he said, the first words that came from his mouth were, we are going to be very rich. Who starts his reign like that? Then he said, but we are going to work very hard. And he proceeded to say, we are sitting on a gold mine. And there is so much opportunity that if we take this opportunity, there is no reason why we should be poor. Isn't it? And with those profound words, we began putting together a strategy which we're calling Centum 2.0 strategy. At that point in time, our balance sheet was 6 billion shillings. And we projected 5 years, having done research, having come from post-election violence, and made a decision that we are going to be investing across the continent because Kenya was no longer as safe as we thought. And having seen the opportunities, we were so convinced that we'll be making at least 30 to 35% return every year. And with that projection, we were confident that that 6 billion, we could grow it to 30 billion in 5 years. To cut the long story short, by March 2014, 5 years later, we were a 29 billion company from 6 billion. What was different? It had taken us 40 years to be a 6 billion company, and it had taken 5 years to move from 6 billion to 29 billion. What changed? Foresight, vision. So before you start making your investments, before you start putting together, dishing out money in the name of investment, first of all, please write down your what? Your vision. What do you want to achieve? What do you want to make this money to become? Yeah? So, first action point from that is set a goal for your investment. Set a goal for your investment. I can assure you, if you don't set the goal, you'll just be helping other people. It will be charity. Are we together? Let's go to the second one. My second very personal takeaway from this is the power of time. The power of time. Someone very wise said, time is money. And I know we like quoting this, but time is really powerful if you use it. I gave you an example of a cent that will multiply in 31 days to what? 21.4 million shillings, isn't it? 21.4 million shillings plus. Let's assume we delayed by 1 day. Eric, let's assume you delayed by 1 day. How much would you have gotten on the 31st day? It's 21.4 divided by, which is what? 10. Can you imagine the difference between 10 and 21? With what? 1 day? 1 day delay. Now, let's assume Joyce delays by 2 days. Now you're at what? Now you're at 5 point something, isn't it? Now you're at 5.3. Can you see? Bernard was at 21.4. You've gone to 10. He's gone to 5 million. How many days? 2 days. Let's continue. 3 days? 2.5. 4 days? 1.3, yeah?
1.25.
1.25, isn't it? Eh? How many days? 4 days, isn't it? By day 5? 671,000. Now you're below the 1 million. So 5 days made all the difference. The power of what? Power of time. Somebody who invested and maybe just withdrew their money on the 26th day would have left with 671,000. Someone who waited just 5 more days would have left with 21.4 million shillings. They look like they never invested in the same thing. The power of time. So, time is of the essence. If we delayed investing the way we were investing in 2008 to 2014, we would never have captured that opportunity, because at that point in time, there was also something very important that was happening. Do you remember the global financial crisis?
Yeah.
So the global financial crisis was happening, and then the US started doing something else that we had never seen before. They were calling it quantitative easing. They were releasing cheap money into the economy. I remember the interest rates in US went down to 0 point something, isn't it? Eh? Europe went to negative. So all these people were getting cheap money, and they were looking for a destination for this money. And where were they coming? Africa. Our stock markets, if you look at that point in time, they were flying. Yeah? We would have missed capturing a moment. The power of what? The power of time. The more you expose yourself to time, the more you capture amazing seasons. Are you together? The power of time. So what is your take home? The best time to start investing is when? Now. Because no one can say they are good at timing. The best time to start investing is now. Warren Buffett has been one of the most consistent persons or personality among the top richest people in the world. He started investing at what? 11 years. All the others are newcomers. They come and leave. Or, the Microsoft guy, Bill Gates, has also been there a little bit. But these guys started when they were young, you know. So the earlier you start, the more opportunities you're able to capture. So that was my second one. The third one, or do I stop there? Am I coming too hard? Yeah? Information overload. The third one is the power of multiplication. The power of multiplication. Savings alone will not suffice. Putting money in the bank will not cut it. Leaving money, having a fat bank account will not cut it. That is not how wealthy people behave. They don't like seeing big balances in their bank statement. Jesse, why are you looking at me like that? Have I said something so personal? I hate seeing a fat bank balance, because it means my money is what? My money is idle. My money is idle. It's only benefiting other people. So savings alone will not cut it. Rich folks invest. The rest of us, we save. Rich folks invest. The rest of us, we save. Yeah? Did you see Elon Musk buying Twitter the other day? What did he do? Did he go to the bank to reduce his bank balance? No, he never even, he paid by stock, isn't it? He paid by stock. So these people are always playing with money. Yeah? They're always playing with money. But it's not the money in their bank statement. So money is your employee. Every shilling, every dollar is your employee. You send it out. And when you send it out, it must come back with what? With a return. You must demand a return. Every single shilling you have, you must demand a return.